Hi everyone and welcome to VAT in Shorts by Dhruva. I hope you are doing well and staying safe amidst the crisis that we are facing today. As we continue to work from home, we have come up with another short video on input tax apportionment, especially in the context of real estate developers. Let us begin with understanding what is input tax apportionment. It is a methodology to be adopted for attributing group level residual input tax towards taxable, exempt, and non business activities undertaken by the companies. And how are we required to undertake input tax apportionment? As a default rule, a standard method of apportionment should be used for undertaking input tax apportionment for each tax period. Additionally, businesses are also required to carry out annual washout, which reflects the actual use of inputs and input services. And for this purpose, four special apportionment methods have been recommended, especially for cases where the input tax recoverability under the standard method is not reflective of actual use of inputs and input services. In the context of real estate developers, the guide recommends that the floor space method be used. As per this method, the residual input tax should be apportioned in the ratio of taxable floor space to the total floor space combined for all the properties together. While undertaking input tax apportionment under the floor space method seems like a simple task, however, there are certain inherent challenges. Number one being for ongoing or under construction projects, which may take up to 3 to 5 years for completion. What is the floor space that is supposed to be used for undertaking input tax apportionment for each tax period? First option would be to take the actual floor space as on the last day of the tax period, which would vary from each tax period or for each tax period. Second option would be to adopt the floor space as per the project plan, which for me is a more logical option, as by the end of the project, the same would reflect the actual usage of inputs and input services. Secondly, identifying the floor space for each and every property may be a difficult task. In such a scenario, companies will be required to go to FTA and seek a special approval to use an uh, alternate method, even though the primary business of the company is within the ambit of real estate sector. This can be a challenging task, and FTA may deny the same, as floor space method is specifically recommended for real estate companies and developers. Thirdly, FTA has recently come up with a clarification that common areas such as lifts, lobbies, etc., should not be considered for the purpose of undertaking input tax apportionment under floor space method. Can a similar analogy be adopted for developers who are developing large projects and for whom the common areas are like parking lots, mosques, roadside developments, etc.? Can we say that such common areas should also be excluded at the time of undertaking input tax apportionment under the floor space method? Lastly, with regard to the mixed use properties, it will be very important for the companies to identify a floor space for each and every unit, as one particular unit could be used to make taxable supplies in the first tax period, and the same could be used for making exempt supplies in the subsequent tax period. So these are certain challenges that the companies are facing at the time of undertaking input tax apportionment using the floor space method. That's all from my side, and I hope I'm leaving you with certain thoughts to ponder over the next few days. Watch out this space for more videos in our series VAT in Shorts. Till then, take care. See you.